Please read this disclaimer carefully before proceeding further. Welcome traders to this week's analysis of our dollar index. My name is Vic. Thanks for joining me here. What we are going to do is actually revise the dollar index analysis, and we are going to start from higher time frame. Not many people, not many analysts actually look at higher time frame. They try to focus on 4 hour or daily, maybe weekly at the most. If you have been following my analysis for some time, then you know that we should always look at the higher time frame picture, because that's the one which is driving the market. Not 1 hour, not 5 minutes, not 15 minutes, not even daily time frame. It's always weekly, monthly, or even higher time frames. So this is what we have got. We are going to look at the 12-month time frame, which is the yearly time frame, and what we can see that market is trying to do something which is very special. Right now this market is started to go higher, and it can actually form still a bullish candle this month. And the reason behind this is because this is a W pattern which is right there, and that has already reached its profit potential. So you see the market has come to the same level after visiting a little bit higher, creating a double top, and then coming back to the same level. So far this level has not been violated, and if it has not been, then I'm expecting dollar to move higher in coming years. And this is the 12-month time frame. So currently the level that we are at, that is a very kind of critical sort of level for dollar index. So that's the yearly time frame. Let's go to the 6 monthly time frame, because we are just about to enter the new 6 month, starting from July, so the end of June will be a very important time for all the markets. So right now what we are looking at is this currently 6 month is like this, and I do not expect market to go below this, because this is a very strong level that we have got. So for next 6 months it may be staying in the same level or so, but I'm expecting to go higher. So I'm still bullish on dollar. I am not bearish on it on long term. If I look at the 3-month time frame here, let's go to the 3-month time frame here and then see what's happening. Now this is a classic candlestick formation which is happening right now. So in the month of for another month or so, the market can actually go a little bit higher, and then after that market will start to go higher. There'll be a bullish candle. As you can see, the market is trying to do what? It is creating alternate candles. So once the third month has finished, which is going to be the end of June, the next 3 months are going to be bullish, and if the market finds a momentum, then it will continue towards the end of the year. So DXY is going to be bullish if this candle, if this current 3-month candle stays where it is or does not actually go beyond these particular levels. What are levels I'm talking about? If it does not actually go beyond this level, or in fact actually this level, then the 3-month candle is expected to be a bullish candle. Why? Because it is creating an alternate one, and that's a candlestick pattern that we have got. Okay, so that means in a month or so we can expect dollar to move in a good way towards the upside. So this is what we can expect on higher time frame, and if that is the case, then we should be tending towards a bullish case for the dollar. Let's go to the monthly time frame and see what we have got. On monthly time frame, the market is running inside a channel. As we can see, the market is right there, and we are testing kind of the bottom part of the channel. That means that it is expected to move higher, at least to the midpoint of the channel, and that means it is going to come to near about 95.5 or 96 area or so. So that is one way of looking at it. Another way of looking at it is, if I go to if I squeeze out and show you this, then we have a W pattern here which has formed, and that W pattern actually does not finish here. It actually in fact goes all the way to near about 110 or so. I have mentioned this in previous analysis few times, so you might have seen me talking about this. So this is the W pattern, and it does not finish here. It actually finishes near about 110 or so. So this is just a temporary stop on monthly time frame. This is simply a consolidation. So unless it breaks through this, we cannot say that dollar is actually bearish. We we can also expect it to be bullish if it actually closes beyond this particular level here, and in that case it may just not stop here at 110 or so. It can go all the way to this level as well, and that may take few years. So dollar is not dead yet, but it's just that it has been losing its purchasing power due to inflation and all that. That's with any currency, that happens with all the currencies. So that does not mean that dollar itself is weak here on looking at the chart. Okay, so this is what we have on a monthly time frame. Let's go to the let's look deeper inside into this. Now there is a very important thing which is happening, and that is very, very critical for the dollar in the coming week. So the next week is very, very important, and next month overall is going to be important, as we saw, because that is going to be the end of the first half and end of the quarter as well. But next week is going to be very important, because this is what's happening. The market is creating a kind of M pattern inside. If you're not able to visualize, then when we go to the lower time frame, then you will be able to see it. But there is an M pattern here, and there is a critical monthly level right there. If it actually closes beyond that level on weekly basis, then we are expecting market to go down, further down into this, and maybe this previous demand area around here. So that's quite a possibility. However, if next week it does not close beyond that, that means the market can head back into the bullish mode. In fact, this entire month can turn into a bullish candle. If it all depends on how the next week is going to perform. Okay, and if that happens, then we know that market will start to go higher, because we will have two W patterns here like this, and another one like this, which can move the market to this level. Okay, so that is why this can happen. So what is that important critical level is, right? So let's see what level we are talking about. So let me bring in weekly time frame. On weekly time frame, what has happened is it has had been creating a bear trap for a lot of people, and a lot of currency pairs have been moving up, but this is a bear trap. Why? There are very clear signs. Look at this. We have very good rejection, and the market has come back to test that previous rejection here, right? That usually happens when the market is shows initial rejection from a level and then comes back to it. Now in extreme cases, it actually goes beyond it as well. So I won't be surprised if it starts to push down at least once more, just to grab all the stop losses and all that, hit the liquidity and then start to move up. Okay, but this candlestick pattern that we have got, that is looking bullish, but this candle, the last week's candle, has closed inside the wick, which means there can be another bearish candle here, or at least a bearish move. So that's a possibility, and that will also hit the liquidity. But ultimately my bullish bias on dollar is still there, especially coming from higher time frame. Another thing that you can notice is that there is an M pattern. It's little extended M pattern, and the reason behind that is because it's not just one M pattern. There are two M patterns which are available here. One is this one, another one is this one. And students who have gone through FCP training, they will be able to analyze this thing and see what I'm talking about. When this sort of thing happens, we know that market was expected to reach this near about this level or so, because of specific Fibonacci ratios. Okay, now because it has hit that, I'm expecting it to go higher and hit one of these levels here. So that is why I'm expecting dollar to ultimately go bullish. So whatever the dollar is trying to do, little bearish move and all that, if you want to play that, that's fine, but I'm looking for a bullish move on the dollar. Okay, because higher time frame is suggesting that it is going to go higher. Another thing that you should be aware of, let me actually bring in original analysis. So this is the analysis that we have been using for past few months actually. Now this is the gap. There is a gap left here, so that means the market is expected to reach that level at some point in time, and as I said, the market may go back up, and this is the FCP zone, and this is the monthly critical level. Monthly critical level is 90.127 or 1.33, near about that. So that's a critical level. This month must not close beyond this. If it does, then there can be a problem. The monthly candle, if it closes beyond, then there can be problem, and in terms of bullishness. If that happens, then market can come down all the way to near about 89.20 or 88.5652. So that's a possibility. In fact, it can actually go even lower than that to 88 as well if that happens. So that's why this is a critical level. So let's see how the next week plays out. There can be a lot of ups and downs and all that. So let's see how this month closes, because the month end will be very important. And this is the M pattern which has formed, and that means if the market starts to roll up, then all of these levels are still there, and these are going to act as resistance. And this red line here, which is 90.796, is going to be an important level as well. Let's look at DXY on Vata and Visage. On Vata and Visage, as I mentioned before, people who have traders who have subscribed to Vata and Visage, they will be able to see what I'm talking about here. So let me just quickly remove this. Okay, now let me I will post these levels if you're not able to read them, and the chart onto our Telegram channel, so don't worry about it. So one of the critical level that we found from FCP analysis is kind of similar to what we have been given by Vata and Visage. This is the Vata wave. If it actually closes below that this month, then we can have a little bit of problem in bullishness for dollar, because the market can in that case fall down to lower levels here. And this is the monthly time frame. I'm expecting market to go and close above that water wave that we have got. In fact, it can also turn into bullish candle. So let's see how the next week plays out. If I go to the weekly time frame, it has reached its profit target here. This was the sell signal, right? How do we read this Vata and Visage system? Is very simple. You match the colors. So we have the red color here, which comes first. We had the red Vata wave, and this overall trend is also red, which is the high time frame red. This line is red. That means it's bearish. It's still bearish, right? Okay, and this arrow is the signal to go short on, and this is the profit target, the white dot. Once the signal has come in, then you look for the profit target, and then you get out at that. So that profit target has been reached, and now if the market starts to go other way up, then we can look for long position. Right now, as you can see, the market has come to near about the same level here, but the Vata trend has not. That means this is a kind of divergence developing already in the price action. That means it can actually go upwards. So there is more indication that it can go up. Let's go and look at the daily time frame. On daily time frame, there are few targets which are at the bottom of the price action. So one is this one, where the market has reached. Another one that we can look for is this one, because remember, it can, as I said, DXY can actually push one more time just to grab all the liquidity and everything. So these are the levels that we have got. 90.161. Okay, let's take that 90.133 coming from FCP, and then we have 89.622, 89.351, 89.249. These are the levels that I will be monitoring. On 4-hour time frame, the market started to go higher because the water trend changed, and then we had a divergence. The price was at the same level, and the market was showing me, water trend was showing that it could go up, and it got stuck here in Vata curve. Why? Because this also acts as dynamic support and resistance. However, if the market goes beyond it, then we are looking for this profit target, and you see the market is also creating a kind of W pattern here, which can push the price up. So a lot of factors are actually telling us that DXY is ultimately bullish, but always be careful, because the market makers and hedge funds and investment banks, they are also watching the similar sort of thing, and they could be pushing this market at least once more, just to grab the liquidity and all that. So you have to be careful. Do not risk too much, trade wisely. right? And if you're interested in what envisage, then go and check it out on the website. It should be there in the description of this video as well. Right, so this is in-depth analysis, complete analysis of DXY, and hope you enjoyed this analysis, found it useful or educational. If it did, make sure you share it with other traders and trading communities. Hit the like button and put in a comment to motivate us and to help with the algorithm, searching algorithm, so that a lot of traders can actually benefit from this video as you are and as we are. Okay, so I'll see you in the next one. Have a great trading week next week. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form.